Good morning. I almost felt like this had to happen. It was some kind of weird move yesterday, kind of obviously on the news that we all know. And, you know, and I'll repeat, I was like 99.9% sure this thing was going down yesterday. And then the news came out, and luckily it didn't trigger the short that I believed was at hand, so didn't get hurt. And then just that explosive move as the news hit to the upside, and just looking at the different ETFs and indices at the end of the day in the room, I said, I don't know, this just is not something I have confidence in, or that we should do anything with, and let it kind of see what happens over a couple of days. Whereas, maybe if this would have chopped around for a couple of days up here at the top of this bar, I would have been all over this thinking, let's go higher. Because when you get that wide range bar, range expansion, increase in that volatility like that, especially after a big down red bar, it's just like this. And so on a smaller time frame, you just see a whole bunch of little bars going up, which creates that price void. So historically, you need some consolidation, which this is what this did the majority of the day yesterday. But, you get that going into an extra day and maybe two. And so, yeah, exactly, Rich. You're saying Christmas tree pattern. I call it a frog in a blender, as traders are getting, chopped to pieces short. Maybe they flip and go long, and now they're getting slapped back down in the other direction. So, of course, this pattern is just one of insanity, madness, uncertainty, call it what you want. But whether it's a hedge fund manager, an individual trader, from this time frame, they really should know better than to be getting involved in really doing anything until there's some contraction. So when you get a range expansion, you need some kind of, not you have to have it, but a range expansion after a drop like this, even this day here had a contraction in that the body was small. So here you have something to go on, a climactic kind of a pattern. And typically after the drop, you get some kind of retracement, or maybe a larger one and then a short, or you get here where we may get a retest and reversal. But this kind of price action, it's a coin flip where you could just say, hey, you know what? I'll give it a shot with a giant stop. And so, no real harm done anyway. But as far as a high probability pattern of calling the direction, no, that this is not it. So we'll see where today winds up. At this point, there's a move back down to where that move started. So there is support down here. So are we going to short this? Hell no. Hell no. And you can see the way this came down like this. Actually, I'm not even sure till I see a picture of how this develops after the open down here, whether I would consider going long for a counter trend trade intraday. So I would expect the markets to bounce from just looking at this chart, whatever it would be. I would expect it to bounce at support after a drop like this. But the move back down with this kind of a pattern is really kind of a coin flip as to whether, who the hell knows, whether we get another green bar back up. One of the things when I heard what the news definitely was at the end of the day when we did coaching, so I wasn't sure what it was yesterday when it happened, and Trump kind of backed off on, making the tariffs less than they were. And I said, gee, the guy blinked. What's up with that? And so it wasn't a sign of strength. And now, whatever's going on here today, this is just a picture within this time frame that says stay away and wait for some picture to develop here that has a historical probability of calling direction. So look, maybe tomorrow, if this stays down here, maybe it's be worth the short. But now, as it's retraced all the way back down to this low, we have to see what the reaction is at this point. And let's not forget that this weekly time frame and even the monthly is still in an uptrend. So this is just crazy. We got the break of the trend on the daily, and so we do realize that the deterioration or break begins in a lower time frame and then eventually evolves into a higher time frame. But until that happens, things can be erratic. And I wrote that in the advisory letter I mentioned in the video. So if this eventually develops into a break of this downtrend, this uptrend here, and then we have the daily and the weekly in downtrends, and we do have a void below here, there should be some fantastic shorting opportunities. Whether you short the underlying, buy puts, do a debit spread, sell, call credit spreads, the short side or the bearish side will be higher probabilities with the appropriate patterns on the daily chart. So that's where we are here today. And even as we start out here from an intraday trading point of view, it's not as if it's gapping below the low of this green bar. So how do you short something like that? You just don't until you get more information. NQs, same story. We've been looking at these charts over the last week or so and just seeing that a lot of them look the same. And it looks like, for whatever reason, this isn't filling in here. At the moment, eSignal is having a little bit of a hiccup, but I don't see these things. Maybe it's my internet. I don't see these changing here. Let me see what happens here. Let me see on Control-Alt-Delete. What would that do, Robert? I see that my TC2000 is updating. Refresh. Might have to close it to do that, don't I? I don't know. Give me a second to close it and I'll reopen it and see what happens. It's reopening. Alex, you're too much. All right. So there we go. Oh, let's see what happens here. There we go. Whatever. eSignal had a little bit of a hiccup there. So similar setup here. Didn't get as far down to the bottom of the daily range there on the NQs, but it certainly looks like it's headed there. It's beginning to stabilize in the middle of nowhere at the moment. And just looking at the weekly, we back away into a higher time frame to get maybe a clearer view when a smaller time frame becomes erratic as this has. And so what we see here is, what I like to do at times is kind of just visualize, but just to show you is that to say what's going on here is that this was going up, it's come down, and just letting go of the gyrations. It's just going sideways now. Well, today's Wednesday. We'll see where it ends up by Friday. But it's just as it came down here, the closing prices are just about where they were 2 weeks ago. So in essence, all these gyrations mean kind of nothing as far as a definitive move in one direction or the other. Oh, awesome, Robert. Glad you enjoyed the coaching. I'll get the replay out to everybody. So we looked at YM, we looked at the NQs, the ES here is the same story. And I'm just looking at the spiders to see where they are in relation to yesterday's move, and because that started pretty much at the open. I'm not sure. Maybe the timing of that was well planned, possibly. And so it moved up, and we're here at 288 and 289-ish. So, a gap down to the area of the bottom of the green bar, it leads me to the same thinking of looking at the futures as to, do I want to buy this down here? I'm not anxious to do that, that's for sure. But if I was to get a pattern down here where it's a breakdown failure on a 5-minute chart, maybe at 10 o'clock, and I see it's not going lower, I would give that a shot on the long side for a day trade. But if it's down here, say at 2 o'clock in the afternoon, and it hasn't made some kind of significant headway back into this green bar, I think, down it goes. So we'll assess that as the day progresses. Qs 150, 185 and change. Same story here. Same story. Looks a little better on the weeklies, but this bar is in development. Still got 3 days for this to go. Let's look at the transports. Well, look, transports there. Back down to the low. Same story. Sideways. This just looks like, unless some miracle happens, China and Trump and the president over there all of a sudden sit down and, have a happy ending together. I think this is going downtown. That's the bias, Rich. We need more information in the moment. The information that we have right now says the downside is coming, but because this is a news-driven market, it's like you're always looking over your shoulder, as to what's the next shoe to drop. Transports don't move much in a pre-market, but you can see how this looks. It looks like it's going down. Just curious here. Semiconductors kind of holding up there. Well, I guess they're just not moving much. We'll see where this goes. And Apple's getting shellacked here, which looks like it was soaring to new all-time highs. So they're just taking a look at a few glances of what's moving around here. Amazon down 28. So nothing good happening here. Bottoming type of patterns that are being potentially destroyed here. And what everybody is talking about in the news is the fact that I did some changes on here yesterday and turned everything black and getting it back to the way it was. But the news is saying the 2 versus the 10 year is now inverted, and this is the 3-month versus the 30-year, which is just right on the edge. So it'll happen. Unless something really turns around, this will invert. And then we know there's a long lead time. We talked about in the coaching yesterday the fact that how fast things are moving because of the the speed of information and the fact that many are becoming more and more educated about the intricacies of what goes on in the markets, especially those that are students here or have been students over the years, where I've shared a lot of this stuff. So people are becoming more educated about the market. So maybe this recession type of thing isn't going to take 6 months or 18 months to unfold, and these markets are going to go down. So we will see how this all develops over time and look at it together. And just everybody may be curious about internal. Sorry about the black charts. Get them turned around here. But they got bullish down here, and right now let's just decide to sit back a little bit, gather a little bit more information, and we'll see what develops on an intraday basis. All yours, Dan.
Good morning, folks. Yeah, when I did the review last night of New Trade's video, I was saying so much of what Greg just did when he started off talking about the patterns of the spiders. I said the same darn thing. I'm like, folks, we picked up the bullish bias and we did a lot of put spreads. And any directionals that I did, they were on their own page, but I made it very clear in the green room and in the recording. I'm like, this is not a directional pattern. It's a friggin' mess. It's a day trader's environment. We're getting another push down here pre-market, so that's not looking good. And this is also the picture of what Greg's talking about, that we're looking for all morning long. If it can't bounce and take out at a minimum this pre-market sideways resistance, then yep, it looks like we're going downtown. Okay, let's look at opens here, because I'm not going to be looking for new trades at the open. I'll be in total whirlpool here. We have a Condor, and the put spread now is in danger. Delta Golf, we have a put spread. I tightened the stop to yesterday's low. MLM put spread, and I tightened the stop. It's gapping down, but just eyeballing it, it's less than 50%. So that's still relative strength to what we saw in the spiders. Amazon, we have a put spread and we covered half, and I tightened the stop to 1805. So we'll use a 5-minute low for that. But we still should be, profitable even on that half, because we got in at a fantastic area yesterday. And we did Greg, this is reminding me of this day, because we sold a put spread. We sold a call spread on VXX and a put spread on spiders on this day. And then this is what's that movie? Groundhog Day. This just feels like another friggin' Groundhog Day. Trump tariff issues, and we're getting a bearish gap down. So we have a call spread on this. Stop over 30.12, so we're still fine as long as it holds here. We have a spider put spread, and it's the 287, so way down here. And I was hoping pre-market would hold, and it's not looking good. So Greg, let me ask you, should we just make a global, let's say something has not stopped out, like the spiders. Do you want to let the stop get hit? Do you want to wait 30 minutes? What's your opinion on an ugly gap like this?
Where's the stop now, Dan?
Let me get it for you.
It's going to be a gap down.
It's two.
I would not exit a position on a gap down of this size.
No, I know. I'm saying at the stop, it's 50 cents lower. So look what I just posted. That was yesterday, 287.35. So it's 50 cents away. What if it hits at 9:35, the stop? Do we take it or wait 30 minutes?
I don't know if I'd wait 30 minutes, but I'd hold my breath and just kind of assess things, because I think the way things are going, they're going to take out yesterday's low. And historically, when markets do that or patterns do this, greater than 100% retracement concept is that they reverse. They're going to nail the stops, and then they're going to reverse it back up, and there'll probably be a better point to exit the trade.
Okay, so
to exit the trade unless some miracle happens, and I don't expect that. I just think there'll be a better place to soften the loss.
Okay, all right. So I'm going to send an alert to our members, tell them that. All right, so here's what For those of you who aren't subscribers, that's going to be our game plan for opens. Finally, PayPal. Oh no, PayPal and Triple M, but we're short the 102s. So like you said, we're, in hold our breath mode. Triple M we have, and finally LMT, the 370s. So it's still $5.50 away, but we're just going to be in management mode. Let's look at our swing opens real quick. C block was one that was on its own. No, this was actually, no, C block was a new trade yesterday. It was a 1, 2, 3. So it was beautiful on its own page. And now we're getting a bearish gap down under yesterday's low. CDLX, that was in the weekend letter, and that triggered yesterday. ETR, we're long stock. JHG, we are short stock. J&J, we're long stock, and I tightened the stop to yesterday's low. Overstock, what a disaster this turned out to be. That was a beautiful, beautiful earnings engulfing. We stopped out of the covered call, break even. So Tim, as I said, when I just posted there, we're just going to wait 10 minutes and I'm going to be in total management mode. We'll go through one by one. I'm not looking for new trades at the open for all the reasons Greg talked about. But we have a put spread on this, and it's far away. It's a $17.50 puts. But look at this, is a breakout failure. That is a nasty breakout failure. AYX, we're short the way out of the money 115 naked puts that expire this Friday. That looks fine. Dish, we have the climactic. Hey, look at the old Dish positive here in a weak market. That's a nice sight. So far we don't have to worry about that one. Millennium, we have a covered call. Casey, covered call, and I tighten the stop to Monday's low. Whiskey, gapping down, but our stop now is under this red bar. And finally, SIBO, we have a covered call. And I mentioned, let them take the stock if it expires in the money on Friday. All right, that's it there. Kua, that's garbage, nothing going on. CDK getting clocked, 43 bucks. Wow, that's gapping under all this. It's excessive though. Anything green today is strong. 45 bucks, that's the all-time highs. That's going in a window. PFGC, that's a nice gapper. BGG was earnings, but I can't tell what it's doing. This, I don't know. Well, it's not earnings because it's an IPO. But I haven't been following this. I just saw it going by the ticker. I'm like, wow, that's strong, but it's a monster gap. But we'll have to keep an eye on that. Greg's Coffee Shop down. I'm assuming earnings way the heck down here. Macy's, disaster du jour in the retail sector. Look at that. It looks like, yes, well, it bounced yesterday morning with all the retails bounced on the trade news. That was a beautiful late day breakdown setup. If the market were still open, boom. There's your almost 100% retracement, bearish consolidation. And today, our MT Live is on that subject. Late day breakouts, breakdowns. We'll have to maybe add that one to my list. Overstock we talked about. Team gapping down. Oh, McGraw. McGraw, you sent me this last night. And I said, I loved it. This was a long over yesterday's high. So it's gapping down near the lows. But still, if it can recover and take out yesterday's high, then you're going to have two big green bars here next to each other. Go kind of, bull flags here. You put your flagpole from this breakout to here, kind of a flag pennant, whatever. 41 bucks, that's going in a gap list. That's bullish. So in a weak market, I've so far found two bullish gaps. Wow, my gen. Wow, that's another disaster. It's on earnings. It's gapping to this low here. That you don't see very often. HZNP, you're gapping up 27 bucks. There's another beautiful gapper. HZNP, and McGraw asked me about that. I got a bullish daily, I got a bullish weekly, and it's relative strength. HZNP. Wow, I can't believe I found three bullish gaps today. McGraw, this is a McGraw pick, kind of a triangle breakout. 104, gap same with that other one. If it can still come back and take out the highs. T over yesterday's high. Eyeballing here, it's gapping 50%. GIS over yesterday's high. Echo Whiskey, I posted as a long over yesterday's high. I doubt it's going to hit. ZBH, we were in that and we took our money. This QTO, you all were watching yesterday. PFGC, look at this thing going. I'm doing nothing here at the open. Our ATR is green, so that's good. We'll go through these one by one, but I'm so glad at least we got into covered calls. CTOS was one I wanted to do a put spread over this high, but we didn't get our premium on that and Whirlpool. Oh, no, okay, that's okay. That our put spread is in pain now, not Whirlpool. Sherwin. Let's just hold off on both of those, or I guess cancel them.